Welcome to the Ag Inspo podcast, where we delve into the dynamic world of agriculture, uncovering the stories that inspire, empower, and drive change. Join hosts Rena Striegel and Rabou as they explore the journeys of farmers, entrepreneurs, and leaders who are making a difference as they navigate the critical work of transitioning their operation to the next generation. From navigating family dynamics to developing the next generation of ag leaders, we'll bring you the insights and inspiration you need to thrive in today's ever-evolving agricultural landscape. So whether you're a seasoned industry veteran or just starting out, get ready to be inspired, informed, and empowered as we learn from best practices and a few colossal failures on the Ag Inspo podcast.
Hey everyone, it's good to see you. I am so excited about our guest today. We are going to be talking to Jenni Brown and Casey Westphalen from NutriQuest Business Solutions. They provide part-time or fractional CFO services to farming operations in a lot of different disciplines. And I'm really excited to have them come on and talk about some of the things that we should be keeping our eye on around financial management, as well as how good financial management supports the succession plan that a farm might have. So I'm super excited to talk to these girls today. I know, Ron, like you have, from starting from 0 acres and building the operation that you have, how important has understanding and continually improving your financial management been to you?
It's everything. It's everything. If we don't understand the financial piece behind our businesses, it doesn't matter how good we are at raising cows or pigs or raising crops, that we are bound to fail. And so having that understanding and honestly being able to have an outside perspective of people being able to bring their perspective into our business and help us be able to not only just have a better understanding of how those numbers apply to us today, but how we can use those numbers as we build into the future. That's the future of production agriculture in my mind.
Yeah, I know even like financial management, some of the things that you've done have been to even look at opportunities that run alongside your farming operation to make sure that you had multiple revenue streams so that when one is kind of slagging or suffering, you've got others that continue to kind of float the boat, so to speak. So how has financial management really allowed you to get into those other things? Because I know you just don't walk around and start businesses willy-nilly, at least, well, some people do, but it's not always the most financially prudent thing to do. So how has that helped you determine where and how to diversify?
Well, if you look at, that's really why 95% of small businesses fail within the first 5 years is right. Because that planning piece, that management piece isn't really thoroughly thought through. And for us, diversification was always a very important component of what we did because our ag business did not support what we were doing as we were building it. And so we were really honestly forced to have to look at other resources and other opportunities so that we could create cash flow to either live on or to inject into our business so that we could help that business grow and get it up to a healthy level so that we were able to be more full-time in the farming piece. And so in the future of agriculture and as it stands today, especially in uncertain times, which I'm sure we'll talk about today with Jenni and Casey, that as we move into uncertain times, how do we plan for that? And how do we make sure that our balance sheet is healthy? How do we make sure that our relationship piece with the other people that we either have employed or other family members, whatever it might be in our business, that all of that is healthy moving into these hard times or harder times? And how that all fits together to help us keep a healthy business moving into the future is it's always been important to us, and it's going to be even more important as we face what we have coming at us this year and in subsequent years.
Yeah, for sure. Well, I'm super excited to get this conversation started. So let's bring Jenni and Casey in and we'll let them take over the show and see what they've got to tell us today. Okay, Jenni and Casey, it is so great to have you on the podcast. I've been looking forward to this conversation ever since we had breakfast a few weeks ago, because you all have been really near and dear partners of mine and working with farms in succession. So I'm excited to pick your brain and maybe give our listeners a little bit of insight into what a part-time CFO can do for your operation, as well as maybe some tips that we can give our listeners about what they should be thinking about in the second half of this year going into 25 that is going to help maybe eliminate some of the panic that some of our producers are starting to feel, and maybe give them a little bit more empowerment about how they can get on top of their financial picture, their cash flow picture, and ride through this with a little less stress. So, Jenni and Casey, why don't you give a little introduction about who you are and a little bit about NutriQuest before we dig into the fun stuff?
You bet. I'll start. I'm Casey Westphalen. I am the managing director of NutriQuest Business Solutions. Jenni and I are business partners in this entity, with NutriQuest, our parent company, being the third partner. NutriQuest Business Solutions is a team of financial experts providing fractional executive services to livestock and row crop operations. That's a mouthful. And so I've been with NutriQuest for about 15 years, with the exception of a 2-year period where I'd like to say I went to the dark side and worked in production. It's really not the dark side, but it was with a large pork operation where I was the CEO. So I'm back, and Jenni and I are growing and working with row crop and livestock operations.
And you are based where, Casey? Because I know you guys are like all over the country. So where are you based?
I'm based in Southwest Iowa.
Okay. Okay. And Jenni, what about you? What lovely place in the US do we find you this morning?
Hey everybody, I'm Jenni Brown. Thanks for having us, Rena. I'm a director at NutriQuest Business Solutions. I am actually based in Atlanta, Georgia, but I'm born and raised in Central Iowa. So I started my career as a CPA, worked for one of the big 4 CPA firms, and then moved back close to home in Iowa and started working for a swine producer. So really didn't know much about swine at the growing up with agriculture, but been in this industry for the past 20 years. Met Casey at a industry conference and learned more about consulting CFO services and what NutriQuest Business Solutions does about 10 years ago, and just really fell in love with the whole part-time CFO. You know, a lot of our clients have that need for that expertise, but don't necessarily need full-time on their staff. And so it's a really rewarding career, and really enjoy what we do.
Yeah. So let's talk a little bit, because this is kind of, I think, one of the things that people don't really understand is what's the difference between someone who provides high-level CFO type work compared to like a bookkeeper or their CPA. Let's talk about what is and Casey, I loved what you called yourself, a fractional, what was that again?
A fractional executive services.
Okay, fractional executive services, or in my very poor descriptor, part-time CFOs. What is it that you provide that is different from other financial professionals that might be assisting an operation?
That's a great question. And we just added 2 new CFOs to our team, and I described this to them the other day. I think what our team does, what Jenni and I do at a high level, is we understand the operations bottoms up, and no discount to a CPA firm. they generally are looking at the enterprise level. And so we spend a significant amount of time looking at the either what we consider the cost or the revenue centers and understanding the viability or sustainability to those segmented pieces of the operation. Jenni, is there anything you'd like to add?
Yeah, I'd add what Casey said. We really dive in with the client, bookkeeper, or sometimes they have a controller level person on site, and we really help develop processes and reporting so that we can enhance what they're already doing and really sit at that table as their CFO. We are their CFO. We just are doing it as a variable cost as opposed to a full-time salary.
I will say one of the things that I've really experienced as I've worked on multiple farms with you and your company is that I always feel like you guys really stand in the gap. You stand in the gap between the farmer and their CPA, between the farmer and their banker. You sit on the collaborative team when we're going through succession planning and really sit and are able to vocalize understanding about a financial picture in a way that the farmer may feel a little uncomfortable talking about their operation. So I've found in multiple ways you're such a valuable addition in navigating and negotiating some of the more complicated financial discussions, and you really can advocate for the farmer in the way that the farmer is just not able to advocate for themselves. And that is one thing I've always found huge value in the two of you, is that you are not afraid to advocate and to really help put that financial picture in the best and most understandable light. So I have always found that it's incredibly helpful when you guys are involved.
Thank you. I think the bridge between the producer or farmer and the professionals on their team is I'm proud that we're able to do that. We can talk the language of an attorney, a tax CPA, and others, and then we can turn to the producer or the farmer and understand and speak their language. And so we all have the same goal, everybody on the team, but essentially what we do is bridge that gap.
I was talking to a producer the other day, and he was talking about his lender relationship over the past 20 to 15 years. And he was like, we used to just want whatever they wanted to make them happy. They once a year submit their tax return and just, whereas now working with a consulting CFO, it's really a partnership with the lender, being transparent in the decision-making process that, with forward-looking projections, and how much easier it is now compared to when there's a need or when there's a refinance, or the annual renewal is just not as painful, so to speak, because we're being transparent throughout the year.
Yeah.
Yeah.
I've seen that multiple times. Yeah.
Yeah. Lenders are requiring a higher level from the producer and the farmer. And so, there's a bit of a shortage of some analytical folks in the lender arena. And what they've done is push that back to the producer or farmer to come in with a higher level of financial reporting and also forward planning, as Jenni described.
Yeah. Let's maybe talk a little bit about what are some of the things that when you start working with a farming operation that you're finding most often is not being done, that you really feel are some of the foundational things that needs to be in place. What are some of the things that you help right away get cleaned up?
I might go first. One of the first things we try to understand is, how they're capturing data, in the data integrity. If, a lot of the producers are doing a pretty good job, but we might help identify if there's any gaps in gathering production data, and the drivers of their revenue and costs, and also their financial data. They might have several different divisions or departments, but they're not segregating their costs to be able to identify what their cost of production is to benchmark or see if they're competitive in that arena. And so that's probably one of the first things amongst others that we'll look at.
It's even if we want to get granular, it could even be assisting a producer or a farmer to manage their daily cash more closely. And so, what Jenni described is capturing data, and what we can see when we go into a system is the capture is not timely, whether it's looking at cash transactions, production data, invoicing, and etc. So that you're looking at real-time data.
Yeah. What kind of a difference does that make in decision making? So let's just say that you step onto a farm and they've got a lot of lagging indicators, right? Everything's just up behind versus, starting to capture that data in real time to be able to use that data for decision making. What is the improvement that you see when you help them get on track with that?
Their decision making can be more real time, and they're using the data to make the decision instead of what I call shoot from the hip like a cowboy, right? And so you can do some things and make some decisions without using the data. And so if the data is stale or it's inaccurate, then you really are perhaps speculating. And what it provides for the lender is clarity and confidence. And it allows the producer or the farmer to make decisions and be more confident in their decisions when we can help them with quality and timely data.
That's awesome. When you go into a farm, and like Rena said, that commodity markets are pretty tough. And myself as a farmer, I'm quite frankly nervous about going into 2025 based on where our input costs are right now, and considering that we're going to have to try to pay for those input costs and all the other rising costs that we have with the lowering price of commodities. And so when you go into a farm or you market yourself to farmers, what is your value add proposition? Like you're helping them do this, but is there a specific return that you're seeing on farms, particularly in tough times? And I think in tough times, this stuff is the most valuable, right? Because it really helps us develop that clarity and develop that confidence with what we have structured, and maybe trim a little bit of fat that we don't realize that we actually have. And so how do you approach farmers in a tough cycle like we have right now? And what value add proposition do you have to bring to the table to help them? Like, does it help them actually increase profitability? Certainly it must. And so how do you pitch that in times like these?
I'm gonna describe two things. Number one is absolutely during a downturn, a cyclical downturn, an industry downturn, that is when discipline is the most important. But I would argue that you need to continue to maintain that, because in the good times, what it'll allow you is more margin to help you sustain the downturn. And then secondly, I think the piece that when we're talking about cost or revenue centers, assessment of those for profitability, whether they're sustainable, is an asset rationalization exercise. And so in a distress situation where I'm putting together a restructure plan, let's say for a lender, I'm looking at the assets to understand, is there a component, a cost center or a revenue center that we need to liquidate? Nobody wants to hear that, right? That's hard. It's a hard pill to swallow. But the point of that exercise is to save the remaining operations. So if there's a portion that's that's draining, we either need to go in and fix it or we need to peel it off. And so my preference is to fix it and understand, is there can we work on a forward plan? Are there some things that we can do for us to improve how that profit center is performing, to add margin to the bottom line? And so a lot of, and I don't disagree, a lot of producers and farmers, they may either look at they may be a prominently low cost or high throughput. And what Jenni and I would look at is whether or not there's a blend of that's even better.
The forward planning is really our bread and butter. I would say that gives the producer, farmer, the ability to use actual data and predict based on assumptions and where the market's at today. What does this look like 6 months from now, 12 months from now, and 2 years from now? And add transparency to the discussion with the lender or the stakeholders to be able to communicate what their ask is or what their need is more effectively, because it's a conversation between stakeholder and whether it's a general manager or the CFO, but that really is where that's right in our wheelhouse, is kind of our forward modeling tool that starts with drivers of the operation, and then comparing that plan to actual and doing the variance analysis on both financial and non-financial can tell the story of, if the market's changed, well, that is what, why we missed the budget or why we're highlight or low light compared to budget.
Mm-hmm. Let's talk about budget a little bit, because I think budgets still in the world of agriculture give people a lot of pause in terms of, how can you budget when everything's so crazy all the time? And how can you possibly know what you're going to do when you don't know what's coming? So talk to me about how you overcome the objections to budget and help guide an operation into making that a really strong part of their planning tool, and being able to check where they are as they go through the year. How do you overcome some of the objections around budgeting?
I think the key for me is price discovery. And so a farmer or a producer is we hope that they're effectively hedging for risk management. And so I think in the ag industry, we get a lot of positive feedback when we want to forward plan. The lenders are supporting it, but producers producers don't need us to understand what their outcome's going to be on their P&L or their cash. Where we're beneficial is really looking at that balance sheet and loan covenants, even more so. But that producer understands intimately the commodity business. And so, in the swine industry, we look at a NutriQuest hog crush. We publish it, and that's the premise of the forward plan that Jenni is outlining. And so a producer that is effectively using hedging to mitigate their risk is going to be a producer that's probably going to buy into our forward planning even more so than someone who may not be looking at it. And so I think from my perspective, I think it's well accepted. So I'm kind of denying that people would say, no, I don't want to do that. But I do think what we do is a little deeper in that we are looking at P&L and cash, but we are also very granularly looking at a forward plan, including the balance sheet, loan covenants, and a borrowing base. And I think that's a niche for us. I think that's what we do well, and we're proud of it. Jenni, do you have additional thoughts on this topic?
Not to repeat but our core services for routine clients would be, our forward planning tool, which we're describing, and then our actual to budget that incorporates the financial and the non-financial. And I think one of our sayings is, if you don't measure it and set a plan, you won't improve it. And so the process of not only setting the plan, it kind of comes full circle to then measuring yourself against that plan and understanding why you did or didn't hit your target is so, it creates this conversation when you're reviewing financial data that's so much more meaningful than just reviewing the financial statements out of QuickBooks or something, oh, we made money or lost money. I don't know what that means, but what was the plan? And, and doing the variance analysis, we break down for the producer, the budget versus the actual, and then break down the variance between controllable, what we call controllable and non-controllable variances, non-controllable being price changes. And so and oftentimes we're presenting that to farm managers because they have a real impact on the bottom line and, the controllable variances. So it's a whole circle of, actuals to projections within the strategic planning process.
Tell me about, I want to kind of take this into the world of succession planning and tell me how you've seen, coming onto a farm, helping them get some of these processes in place and some of these disciplines, how that supports the process of succession planning.
I think what it supports is the mentoring piece. So you've got, several generations, and the generation coming. What it'll outline is and help us is coaching and mentoring the next generation, especially on the financial side. They're likely to come in with strong production background, and so often I look at, let's say, a general manager or a president role. And in the swine industry, I call it the 3 pillars of leadership, which would be pigs, people, and finance. And when you look at the generation that's leading today, I think they have a great knowledge of all 3 of those pillars. And the next generation may be less confident in some areas, especially the finance piece. And I think what it does is offers an ability to coach and mentor. And what Jenni described in the budget process, and then comparing the actual performance to plan, we don't do that in a vacuum. We do that with the client, and we do it with the person that's leading and those that are planning to lead in the future. And so, we're helping. That's our goal, is to help the next generation. I think secondly, and then I'll let Jenni pitch in, but I think it can give some confidence to what the future will look like for that next generation. They can see the path to success with the forward planning file and understand that if I meet these production targets, there is some risk to price. We can't control a commodity business, but that this is the outcome. And what Jenni hasn't described yet is a continual update of that forward planning file to use as a management tool. And that can give additional confidence to the next generation, because we would model business decisions before we execute on them. And then, as Jenni outlined, we'd measure the actual performance to the plan that we modeled. And so If somebody comes to us and says, we want to do something different and we want to pull the trigger in October, we're going to model it. We're going to make a decision. We're going to run that by the lender. And then when they execute, we're going to measure their performance to the original plan. Jenni,
Yeah,
how about you?
I agree. I think the added transparency for the next generation, I agree that a lot have been in production since they were kids, probably, helping out in the barns, but maybe hadn't been privy to the financial information until maybe recently. And so just the added transparency and being able to communicate, effectively, timely, and accurately, the financial performance of the company is what's really the generation is asking for, trying to understand. And then, on the balance sheet, just what is the financial health of the company? Are we healthy? Are we a little lean because we've been growing? Just the transparency there. We've been, they're asking for all that information. And just some of the other tools that we provide are just, helping them become introduced to the financial management of the company, where that's probably one of the last steps, of transition planning.
Yeah. Talk about how you introduce those things, because I think that transition of financial management, I think, is one of the hardest things for like a Gen 1 to allow Gen 2 to have both access and control over financial management. So tell me how you set up a structure to allow that to happen. Because I love what you said, Casey. We create clarity, certainty, and confidence, right? I love that clarity and certainty will create confidence. So talk a little bit about how you set up that model to where we can start to transition and allow next gen farmers to have the right level of access in order to build confidence from G1 that G2 is ready to take over the operation from a financial management standpoint.
Some of the things that I've done historically, I'll list a few and then I'll let Jenni add hers in. But even beginning at lower levels and having generation 2 research. Oh, okay, so we're gonna add an asset to the company. You go validate. Bring to us what's it going to cost. What do you think the risks are? And so have them do that return on investment assessment. They're not going to do it perfectly, but then be open to some feedback. And then I think the second thing is to start introducing and having the generation 2 participate in the monthly finance team meetings, where we talk about changes to the business operation, what things are going well, really highlights and lowlights, looking at the actual versus the plan. And then I think the last thing is eventually then you have them start participating in components of updating the forward plan for the next year's, with next year's targets, and starting to participate and take ownership in the outcome.
Yeah, I agree. Early including them on, the portion of the financial statement review that they have direct ownership of or direct control. A lot of times just that cost center or profit center P&L, individual P&L. And it's really cool when they start participating in the forward planning process, setting what are we going to spend next year on various components. Maybe they can spend more time on labor. How many full-time equivalents do we need? Are we doing raises this year? You know, that piece, because when they are totally bought in or aligned with the forward plan, and then we start comparing actual to the plan, they have complete alignment with that whole process and start to feel empowered, you know, that they can make a difference.
Love that. I know, Ron, you just kind of went through this, an exercise similar to this with Spencer over an opportunity to purchase a farm. How did you see Spencer like grasp that opportunity to do some of that analysis and kind of come back to you and talk to you about what he wanted to do?
Yeah, so Spencer is my middle son, and he just graduated from high school, and he's always had a very strong interest in our farm. But because of the different work that I've done and because of what our story is, and because we built our own place, he has seen that. And he doesn't want to just integrate himself or have me integrate him directly into the operation to take over. He wants to be able to build his own enterprises alongside of that. And so it's allowed us to have the conversations about what does that look like? Is it possible? The answer is, of course it is. But with the rising costs of land, what does that actually look like for him as a new producer? You know, he would be basically a generation one producer starting his own enterprise. And how does that work with the farm and the different assets that we have there? How can he utilize those? And also having an understanding of what else is out there in the marketplace to offer to new and beginning farmers. And there are a lot of programs and availabilities and resources that he can go to. And so it's been a great opportunity for him and really for us to be able to say, okay, is this possible for you to own your own place? What does it look like? You don't have to have all the brand new equipment to begin with. You might have to just rent some things. And, you know, I think that we have a generation now that a lot of times they see all of these things that have been created over maybe previous generations, and now they want it all. But it's allowed Spencer to be able to really say, look, I can't afford to do that. So that exercise, I think, is very, very important. It has been to him. And it's allowed him to say, to really have a better understanding about the value of our business and our balance sheet to be able to go buy land. And then for him to be able to eventually buy that through a new and beginning farmer program, but also understanding what it's like to set up his own LLC. I even told him, I said, well, I'll just email our attorney and have her put everything together. And he said, no. Like, I want to do it. How am I supposed to know how to do this if you just do it for me? And I thought, okay, I need to take a step back. And I just provided him the contact information, and he's taking that from there. But I'm able to guide him through that process without really completely immersing myself in it and telling him what to do along every step of the way. But we have the cushion of the farm being able to say, okay, we can help you build your own enterprise. And that, I think it's something that maybe we as producers don't always do because we're so busy working in our operation that we don't really have time to work on our operation. And we have these conversations that you're talking about, because what I'm hearing you through what both of you, Jenni and Casey, are saying is that really communication is massively important. And the willingness to sit down and to have an open mind and to look at things for what they are. That sometimes we do have assets that aren't producing. And even though our egos tell us we need to hang on to that sometimes the best decision is to say, let's let go of it so we can make the rest of the business more healthy and we can grasp opportunities like what Spencer's going to be able to do. And I think having an outside source being able to tell us as farmers and providing that perspective to us that this is a good path to take is only going to make us better as farmers. It's only going to make us better as business people. and will help that next generation be able to come on and probably make that transition piece even stronger as a result of it.
Yeah, so I have historically worked on, throughout my career here at Business Solutions, I have worked on a significant number of restructure, and so has Jenni. And we've coined the term new worst case scenario. But I think part of what we do for the next generation, we want to add clarity, and in order to do that, what we may need to do is stress the plan. We need for the next generation to see, what's the more optimistic plan, what's the base case, and then what are the new worst case scenarios that could happen, and we will stress a plan with throughput and price. Those seem to be the ones that we can stress a plan with the easiest. And then you have some things that come up like COVID. I don't know how I could have ever planned for that, but with an understanding of what's my break even, what's my cash break even, what does this financing look like? Will it support $4 corn versus $7 corn? And those are things that I think it's really important that the younger, whether we're calling them G1 or G2, we need to give them those tools in their toolbox so that they're successful with their plan.
Well, so that they have an understanding much beyond, and you've already mentioned it, but so they have an understanding beyond production.
Yes.
When we grow up on farms and we're immersed in it, we're pretty good at the actual production side of things. But it's the other side, I think, that in the changes that we're beginning to see, and really have seen, but beginning to see more of, especially going into the future, that this business component, this transition component, this understanding of what numbers actually mean and why they're valuable, and really having a clear and concise understanding of how those numbers apply to our businesses and how they can actually help us move into the future, regardless of how good of actual farmers, quote unquote, we are. And to me, that is something that as we move into future generations as agriculturalists, that's going to become more important all the time. That, like you said, we can't control where the commodities are, but the old saying that I've always said in agriculture is we're in a business that we buy everything for retail and sell everything for wholesale and try to make a profit in between. And so that's getting tighter all the time. And that component of the financial management is going to be at the forefront, in my mind, of how we continue to stay in business and be prosperous into the future.
Yeah, I mean, and we haven't really talked, the first generation wants to hand the second generation a sustainable business that has good processes in place. They want that for their kids. And so, they're on board too with a lot of these process improvements and added transparency. And we haven't talked a lot about benchmarking, but that's another tool that we provide to our clients, since we have more than one client, several clients doing in the same industry. When we're providing a financial review to the executive team or to the stakeholders, a lot of times we'll get through the cost section and they'll say, well, that's great, but how do we compare to everybody else? And so we can add that clarity too, to how sustainable is this business, how competitive are we, and what tweaks do we need to make to get more competitive so that they're passing off a sustainable business that can withstand the time.
Yeah.
Do you find in your work that when the next generation takes over the previous generation, do you find that there is an open discussion, or maybe that there needs to be more of an open discussion about changes going into the future? One of the things that I've told Spencer through the process of what we've been doing is I said, our farm is what it is today, but it doesn't mean that our farm has to look exactly the way it looks today going into the future. And so are those conversations taking place? And I've got to assume that the two of you are really helping to move those conversations forward to say, look, we might have to completely change a lot of things as we develop our vision into the future and our plans into the future. And how are producers responding to the fact that you have one generation that spent 20 or 30 or 40 or 50 years building something, and then you have a new generation that comes in and says, well, I want to do something different. And how does that conversation work, and how important is it for that next generation?
That's why you have someone like Rena on the team to help facilitate those discussions. Yeah,
critical, tough conversations is what you just outlined.
Right. But in general, I feel like, it's a tough conversation to approach, but I feel like, again, the first generation does want to hand off a good business. They might not have done it that way, and they want, their story is important, where they started, probably from very little, and they built it to the enterprise it is today. But today it's much different. And so you need like a whole different set of processes and disciplines, for the amount of money and risk that they're taking on. Yeah. Casey,
I think it can present a challenge between generations, just to be honest. You can have a generation one that's firm and stoic, and this is how I got here. And so that can be a challenge for the generation two to come in and seek some changes. I think Rena's probably could speak to this better than me, but I think that could be a challenging dynamic. You could get, as Jenni described, openness and willingness, or the generation one could maybe want to stamp that down a little bit. And so I think it's important to give the generation two a voice and understand the transition period, and what that looks like. Because at the end of the day, they do have to walk arm in arm through this transition period between generation one and generation two. There may not be a flip of a switch, between old and new way. And so I think that's challenging. And what we would do is somewhat of the non-emotional, unbiased piece, and we'd say, well, let's model it. But then we'd have to have the trust come from both generations that the output is feasible.
I think that's a really good point, Casey, is that, I think that financial modeling is one thing, but when we're talking about what's the vision that we're trying to get to, between what a G1 might be envisioning and goals or aspirations that they have not achieved yet, and a next generation that's coming in with maybe some different aspirations or a passion for a different area of agriculture, is, that tool that we like to use is really sitting down and saying, okay, let's get that business plan tied to our budget, tied to our forward projections, so that we can see the things that we desire or are dreaming about. What is the likelihood or the possibility of really making that a real thing? And how does that impact our cash flow? If we're a cattle producer and we've got row crop, and next gen says, I cannot wait to get rid of those cattle, and we pull cattle out of a financial forecast, how does that change what we're doing? And I think that can really help to bridge the gap between what I desire versus how does this impact our sustainability and our profitability. Right. So I love marrying the business plan or strategic plan to the other financial things we're doing, because I think that can be a tool to bridge the gap between maybe a slight disagreement about what the future should look like.
Right, because the opposite of what I described as asset rationalization, which is really looking at the cost and revenue centers for sustainability, is there can be dependence. And so what we want to do is make sure that we understand what the dependence is if we peel off a portion of the business and say, well, we're going to peel this off, we're going to sell it or liquidate it or whatever the case may be. It could cause a problem for the remainder of the operation, or it could be better for it because there's focus. And so I think those are the wild cards, right? To walk through and understand.
Yeah. So give me your top tip for the rest of 24. We've got crazy uncertainty. I mean, we always have a lot of uncertainty, but it seems right now that there's uncertainty plus a real heightened emotional component to what agriculture is facing. But what would be your one or two top tips for managing through the next 6 months into 25?
My top would be something that is controllable, which is risk management, your hedge policy, and taking the opportunity when it's there, and then don't reflect in the rearview mirror. I think we reflect a lot in the rearview mirror. Jenni and I do with our clients, right? This is an avenue where I'm saying, just own it. Just look for opportunity when you see a positive margin, take some small bites with risk management, and then don't question yourself. Take the margin. Don't look for home runs. Yeah.
Can I ask a question about marketing policy? When you go on and start working with farms, how many of your farms already have a marketing policy in place versus, needing some help to develop that?
I think in the swine industry, it's pretty well established. And I would say, Jenni, you can correct me, but I would say, from my perspective, in other industries, maybe the dairy industry, it's lesser used, and in the cattle industry, I'd say it's closer to swine. And so the lender would see an advantage to it. And what we can see though is, again, a little bit of the cowboy style where a producer might rely too heavily on bias. And what we support is, what we'd encourage a client to do is to lock in their revenue and their inputs as much as possible simultaneously. It's what we call in the swine industry, a hog crush. Jenni publishes a weekly hog crush on behalf of Business Solutions, that goes out to 1,000 or more people every week. And that's the premise of it, is to look at the 12-month forward hog crush. I think the swine industry does a decent job. What we try to discourage is speculation and imbalance, and speculation would be protection outside of, or in too much, or moving to something like gold or silver and trying to have that relatable to hogs. But at the end of the day, I think it would be us telling them to set aside being careful about bias. Because I think you can get trapped in that, I call it a rabbit hole, right? You can get trapped in the rabbit hole and start chasing a market downward instead of following it up and taking those positions. Does that make sense?
It does. Yeah, it does.
100%.
Jenni, what's your top tip for the end of 24 into 25?
Casey stole mine. No, but I would say, I'm going to say cash is king. If we've coming off a couple tough years and just continue to forward model your cash position and what that looks like in the coming months, comparing that to what you have for a line of credit cap and collateral on that borrowing base, monitoring your bank covenants, because that conversation with the lender or stakeholders ideally happens way in advance and not after you've already triggered a loan covenant. And so those conversations are very much better when they come in advance, and you see it coming. No one wants to be caught off guard with those types of conversations. So look at your cash, do a thorough mid-year review, look at the next, or even each month, like Casey was saying. It's really a rolling forward modeling. So that you're on top of that.
Awesome. I love both of those suggestions. So my last question for you is, we might have listeners going, I love what these girls are saying, but are we big enough to support having someone like that on our team? So talk a little bit about kind of like, sort of what is your low side, like where an operation might be getting a little too small versus the upside of, where what's the sweet spot for a client if they were going to work with you?
I'll talk through the swine, and then I'll let Jenni talk through maybe dairy and row crop. But in the swine industry, the bottom is usually 2,000 to 3,000, equivalent of 2,000 to 3,000 sows. And what we see is we generally aren't servicing the swine producer that's over 20,000 sows, because they have a committed CFO sitting in a chair, on behalf of the company. So it's between 3,000 and 20,000 sows is generally where we service the best. The smaller producer, it is harder, someone under 2,000 head of sows, it's harder to spread our fee. And we do require a minimal amount of staff, what we call back office staff. And so at times we're challenged with producers that are too small, not having maybe the wherewithal to provide us with the timeliness and the quality that we're looking for.
Okay.
Jenni?
Yeah, I agree. In dairy, it's around, 1,000 head milking herd, maybe around 15 million of revenues. And like Casey said, definitely have the back office support. We're all remote CFOs, and so we really rely on the bookkeeper to be able to post timely cash transactions, or we can't utilize our tools very effectively and they're not very useful. And so that is required. If there's not good data today, in terms of production data capture or financial, we can always work with their staff to get those processes in place. But they have to be fully aligned in that goal that is the goal, to be able to use the tools that we have.
Okay, great. All right. This has been an awesome conversation, but I feel like it's time for trivia.
Oh, brother.
All right, here we go.
Okay.
Come on, Ron.
All right. So I have a somewhat financial question. So for those of you who are just listening, this is our trivia portion where we ask trivia and we can see if the guests win over Ron. So it's the guests against Ron. So Jenni and Casey versus Ron Rabou. Okay, here's my question.
Wait, do we have a buzzer? What do we
Oh,
I have to know the rules.
Ron has had trouble even coming up with answers, so we don't really feel like there's ever a breakneck speed answer, and so we usually just have dead silence while everybody thinks. But I mean, you can make a buzzer noise if you want to. I think that would be really fun. Okay, so here's my trivia question: what year did LLCs become available?
Oh my gosh!
Can I Google it?
Without Googling it.
No.
That's
I
not
think
fair.
Oh,
Fred?
okay.
Google it.
Cheater.
Huh.
I'm gonna guess. I know it is before early 1990s because I used to work in a law firm. And so I'm gonna give you a general. I'm gonna say it was in the 80s.
Okay. Any other guesses?
See, I would agree with that actually, because I remember growing up on our family ranch when it went from a partnership to an LLC, and I'm pretty sure that that happened in the 80s. So I'm going to say probably 86.
Okay.
I'll just guess 93.
All right. The actual year was 1977.
Wow.
Okay.
Now-
So I win then because I'm closest to 1977.
No, you do not, because this set of questions is actually set up to make you look quite foolish. So, would anybody like to take a guess at what state passed the first LLC statute?
Delaware.
I am pretty darn sure actually that it was my home state, which is Wyoming.
Okay.
New York.
All right. So I figured Ron would not know this, but he is correct. Wyoming was the first state.
Yes!
Yay!
I win!
You're welcome.
I would never have guessed Wyoming.
Uh-uh.
Not in a million years.
That's cool.
Well, I'll be expecting my swag to show up first class mail.
Yeah.
And so I know that that will be mailed out with great care, with, winning, written all
It
over it.
will.
So
It will.
Yeah.
winner
No,
of
I
trivia.
think, Ron, you and I are going to run a tab with each other. Since the last show you owed me, now maybe I owe you a half of something. So we'll just keep a tab.
All right. Well, if that's the case, then we're even, right? Essentially.
No. You only got half of the questions correct.
Well,
I'm telling you, the audience may have to start weighing in on this stuff. But
I
anyway,
think that
ladies, it
we
was an
need to have
absolute
something
pleasure
where
to have.
close enough is good enough.
She's
Oh my
rounding.
gosh. Where's my mute button? Where do I start muting him when I don't want to hear what he's saying? But anyway, it was so great to have you on the show today, ladies. I have loved every interaction that I've ever had the privilege of working with the two of you on farms and really helping to improve just financial understanding, financial process, financial performance on farms. And so I'm really looking forward to seeing you again soon out on a farm out there somewhere. And for those of you who are wanting to know how to get a hold of Casey or Jenni, we've got their contact information in the show notes below. So drop down there. You can get a hold of them and pick their brains about how they might be able to help you and your operation. So with that, thanks again, ladies, and we will see all of you soon.
Thank you so much.
Thanks for having us.
It's fun.
You've been listening to the Ag Inspo podcast with Ron Rabou and Rena Striegel. Find Ag Inspo on